Welcome back to another class of We Trade Wave course. Today's class is kind of really important in terms of your psychology, and also after the patterns, after you have learned the patterns, after you have gone through what we have taught you so far. This class is most crucial, not because of trading perspective. It's because after you have learned everything, how can you check and balance your emotions in order to trade and keep those moves and keep the profits running? Okay, that's what we are going to talk about today. Remember, today's class, many people just basically ignore it. Many mentors out there who are teaching this course, they are actually ignoring this class. Psychology. For us, psychology is the most important thing after learning everything, because after you have learned everything, you know how to get into the trade. The next big thing is how can you handle your emotions. If you are making big profits or if you are losing big, in both the cases your psychology will take over, right? And how can you have a check on your psychology and how to eradicate all these stuff to save you from losing big time. Okay, so this will play an important role. I've seen many traders who are really good with their analysis. They're very good with their fundamentals. They're very good how to execute the trades, how to execute the strategy, how to look for setups. But when it comes to holding the trades, they panic, right? When it comes to taking out the loss, they panic. It's because they are weak in their psychology. So that's why this class is going to be really important for you guys, especially for those who are struggling with psychology. Okay, let's get into it. Like I said to you, today's topic is psychology. Why is it so important? Okay, imagine if you have mastered this concept, but your psychology does not allow you to hold trades, right? Or you're afraid of losing trades or missing opportunities, right? You won't be able to make consistent money. You might be able to make some money now and then, but you won't be able to make consistent money in this business. Okay, and that's why it's important to strengthen your psychology before you really get into it with your real hard-earned money. Okay, so now the question you must be asking yourself, right, if that's so important, how do you do that? How do you strengthen your psychology? So in today's class, we are going to give you some points. All I want from all of you is to basically write down what I'm saying, right? I will try to speak as slow as possible, so it will give you more time to write it down, because these points, I want all of you to actually write them down, and wherever you see that I'm saying, because I'm going to cover all those psychological weaknesses, right? These everything's where you are seeing that you are the victim of this weakness, you are the victim of that weakness. You write it down, how to overcome that, and put it onto your monitor or your trading desk or wherever you go and sit on your laptop, wherever. But whenever you're looking at the screen, I want you to actually read that. So this will help you, because what you're trying to do, because our eyes are actually made to see this way. When you see something, you cannot I want you to actually read that. So this will help you, because what you're trying to do, because our eyes are actually made to see this way. When you see something, you cannot psychological weaknesses, right? These everything's where you are seeing that you are the victim of this weakness, you are the victim of that weakness. You write it down, how to overcome that, and put it onto your monitor or your trading desk or wherever you go and sit on your laptop, wherever. But whenever you're looking at the screen, I want you to actually read that. So this will help you, because what you're trying to do, because our eyes are actually made to see this way. When you see something, you cannot unsee that. Okay, so this is the reason, naturally, that's the cure. So when you're reading something, you actually seeing few other moves that can happen in this same direction where you are in. So that means you're in a right trade. All what you're struggling with is holding the trade, because you kept on looking at the chart, right? And then you kept on asking questions from yourself. That makes you confused, right? So if you see that my tip over there, or we trade waves are saying that, okay, what, if you are in the trade, what you need to do is, if the market is going into your direction, you either keep taking partial profits, or you keep taking the check on what the market, how the market is unfolding, right? And do not look at the screen for like continuously for 6 hours or 7 hours, or keep looking at the screen after every 5 minutes, right? So these sort of small instructions from us will actually save you and hold you from taking out your trade, which is already a winning trade, right? And it's vice versa in case of losses, right? So let's first of all figure out, remember one thing, right? Before you get into anything, learning about trading, learning about how to trade live, learning about how to get into the market, first of all, figure out what sort of trader you are, okay? Because many people out there, they don't have a clue what sort of traders they are. You need to figure that out. No one can figure that out for yourself. You are the only one who knows, right? And how would you know that? How would you find out if you don't know how to find out what sort of a trader you are? You need to figure that out by getting into the trade. Can you hold the trades for long term? If you cannot hold the trade for long term, you are not a swing or a position trader. Simple as that. That's your answer, okay? But if you can hold the trades for longer term, and you don't have time, right, to look at the chart every 5 minutes or every 1 hour, every 2 hours a day, right, then get into the bigger time frame. And that's where you see the swing trades come in, because they take time, okay? And then you need to hold the trades. Many long-term traders, they are the most profitable traders. The reason why? Because first, they get into the move, and they don't come out until the move is finished, okay? So that's why you need to be very, very certain what sort of trader you are. And believe me, no one can help you out with that. Even if you are going to to anyone, this is only you who would know, okay? So figure that out. After this course, first thing that you need to do is figure that out. What sort of trader are you? Are you a swing trader, position trader? Are you a day trader, or are you a scalper? If you're a scalper, you are more aggressive. You want to get into the trade, get out of the trade. During the day, you want to get into 15 trades, 10 trades, 5 trades minimum, okay? Because you can't hold the trades. What you need to do, as soon as the profit comes in, 20, 30 pips, you get out, right? That's one form of a trader, right? If you're a day trader who would like to keep the trade for a day or two, then it's another sort of form of a trader, right? If you are any of these traders, you need to figure that out. Believe me, no one can do that for you. But unless you do it, there won't be any sort of way where you can strengthen your own psychology. Because if you are a swing trader and you're trading as a scalper, you won't be able to make money, because your nature does not allow you to actually be aggressive. But if you're an aggressive trader, you can't hold the trade for longer, because you won't be able to sleep at night, because you'll be so impatient, because your trades are running. You keep on, you will keep on checking your trades, and that's why you will end up losing a lot of money, Okay, same goes for the day trader. So that's what you need to know. By knowing what sort of trader you are, it will help improve your trading skills by a mile. Believe me on that. Okay, and once you know your kind, you can make informed decisions about whether you are interested in combining news with technical analysis or not, which is what we have spoken about while we were covering significance of fundamentals on waves and structures. Remember when I was showing you on the charts that if you want to combine fundamentals with technicals, how do you do that, right? But if you know that you are that sort of a trader, like for instance you're a swing trader, it doesn't matter for you, because unless it's obviously an election or bigger events like Brexit, etc., right? But if you're a day trader and scalper, then obviously these sort of news will have an important factor for your trading, because they will move the market, and if you want to be get out, you will have to know about these. Okay, so that's what you need to know. And there are other few things that should be the starting point. But once you see that you know about that, what sort of a trader you are, the next step that you need to go to is what pairs you should choose to trade. Guys, with whatever I'm going to talk about today, it's all about, I've broken it down into into few steps where you can actually go in detail and then go step by step. Once you do what we are saying in this module, you will see your psychology will start to grow. Your psychology will start to strengthen quickly. Okay, and that's the whole point of this of this class. Okay, so first figure out what kind of a trader you are. But once you have figured that out, the next important thing you need to do is what pair you should choose to trade, right? Because many people, they just like go 40 30 watch list pairs, and then whatever they find, they just go and trade it, right? It doesn't work like that. Because remember one thing, you need to first of all know which country do you, all right, because obviously if you are living in Australia, let's say, right, or you're living in Canada, right, your time factors will be totally different, right, from UK. Because for me, if I'm trading pound dollar, I know that the movement will start as soon as the London market opens, right? But if I'm trading Aussie pair, I know that I'll be sleeping if the move happens and I can't do anything, right? So that'll be, that'll be foolish of me to actually, get into a bigger position in the Aussie pairs, especially when I'm sleeping. So that's why it's important, first of all, to find out what pair as per your country you should be looking for. Okay, and then as soon as you have find out which pair according to your country, if you're in Australia, you should be looking for Aussie pairs, New Zealand pairs. If you're in America, you should be looking for some dollar pairs, a mixture of sort of chief pairs and dollar chief, or etc. If you're in Great Britain, you should be looking for something for more related to the pound, because that's the moment you should be expecting when you can see the charts in front of you. Okay, and that's when it will all matter to you, because when you are taking the bigger lot sizes, that's when you will see that the bigger the size, the bigger the volatility, the more your psychology is going to get triggered. Okay. And then also after that, you need to find out what time do you have in a day for trading, right? And is that time available for more focus rather than it's not, it shouldn't be the time where you just relax, right? Because your brain has to be active. Remember, in this business, you need 110% focus. Okay. If you are not focused enough, you will end up actually losing a lot of money, even though you know everything. Okay. So that's why you need to choose the time where you are actually available to do to have a focus, complete focus on that. Okay. After that, you need to find out, obviously everybody situation will be different in this, in this point. Are you psychologically sound? What does it mean? It means that do you have any sort of pressure, financial pressure? Are you taking a debt to trade, right? Is your, everything in your family is okay, right? Because remember, if you have a problem going on in the family, if you have sort of arguments going on in the family, you will have that effect on your psychology. And then what you will do, you will try to take it out unknowingly, right, you would be taking it out on the trading and you will be losing a lot of money. That will actually add, more aggression in your behavior. Okay, so you don't want to trade when you're not psychologically sound. Okay, this is important. And then also, what sort of a capital do you have? Because if you have a small account and you're looking for a swing trades, you will end up actually being really frustrated, because by the time you're going to make 5% of your account, right, it will be nothing, but it will take few months or few weeks, for you to actually get that 5%, which will not be worth it. So that's the reason, according to your capital, according to your nature, you need to decide what sort of a trader you are first, which country do you live in, what pairs are actually aligning with my country's time, right? What is the time of the day when I can actually trade, and can I be so focused in that time? If I'm not focused, what hours, can I give it to trading when I'm more focused? Can I, trade when I'm psychologically sound, right? Do I have any sort of problems going on in my life? If I do, then I need to just relax, take a step back, and then come back when I'm rejoiced again. Okay? And what sort of a capital do I have, right? If it's a small account or a big account, then I will be choosing my, my pairs, my, psychological, triggers will come on. What if I'm a swing trader? I need to wait for my, account to grow bigger. I will save up more money before actually I come into the trading, because otherwise I'll be losing a lot of money. And also what I'll be doing is I'll be just getting frustrated. Okay, I don't want that. And then you need to find out whether you can sustain the volatility in the market. If let's say you're trading the exotic pairs, can you sustain the 100 to 200 pips move in few minutes or few hours, right? If you can't do that, then never go to the exotic pairs. Go for the majors, right? They tend to move less than the other ones, right? And it all depends on your risk aversity, right? If you're risk averse, if you're a risk taker, it all depends on that, right? If you're a risk taker, then obviously, you'll be more prone to trade those exotic pairs. But if you're not, then you will be risk averse and you'll be just only taking the safe trades. But that's nothing wrong with that. You are just only trading according to your system. Right? So that's why it's really important that you need to know all these points, right? I will assure you that once you actually write these things down, right, and then look at them, find the answers for yourself, you would be able to make consistent money in this business. Okay? Remember, 96% of traders are losing for these silly mistakes, very silly and common mistakes, right? They're either over risking, they're either over trading, they're trading without a stop loss, they're trading without a plan, following others blindly, lack of knowledge, right? Cannot sustain, handle profit because they are fearful that, the market, might actually take the profit from them, right? And they will keep the, the big losses running because they are so afraid to take the loss, right? Because they can't cut the losses. Psychologically, they're not sound enough, right? They trade like sometimes you will see that, you are seeing the market is showing you a completely different thing, but you're feeling it's something different because you must have heard it from the news that, this move will happen because we have X, Y, Z factors, affecting this stock or this Forex or this economy. We are expecting pound to go bullish, pound to go bearish, right? That will have an impact on your psychology because those things will actually be having emotional, emotional background in your brain when you're trading, right? So this is why it's really important that, you just don't look at, what news are saying or whatever is happening around the world. First, see what is chart saying, okay? See, and then trade that. Don't trade what you feel, okay? Feeling in this one will actually get you killed. So never ever go there, right? So remember, if you're not treating this as a business, you will end up losing a lot of money. Okay, business is what you are actually. If you treat this like a business, believe me on that, you will have consistency like how you're treating. Like, for example, just imagine that you're selling something, right? How would you sell it if you don't have your due diligence? If you haven't researched about that, you will not be able to sell it, right? Because what if the customer will ask you any sort of questions, you won't have answers because you haven't done your homework, right? You need to do your homework, and that homework is basically what I'm trying to tell you here. First, get to know who you are in terms of what sort of a trader you are, okay? Which country you are in, what pair you should trade, how much capital you can, you can capture, right? These sort of things that are actually going to be, making you a very, very good trader, okay? Remember, every trader in the world, they pass by two emotions, right? One, greed. Because what happens, market is giving them, let's say, for example, you enter into here and market is here, you know that this could become a corrective structure here for one more down, right? But you still keep holding the trade, hoping that it is going to go back up to break the top. Structurally, you're seeing this possibility here that it can go down, but instead you keep holding the trade because you're just getting greedy here, okay? And you're hoping that it would happen. Market never works in a hope. You need to see what market is actually showing you and then trade accordingly, not how you're feeling, for the market. Your feeling says that you need to get this, but the market is showing you that it can go down from here. But what if it goes back down from here? When it goes back down, you will still not close it, because what you're trying to do, you're actually thinking that if I close it now, market is going to go back up again, making this sort of a structure, and then what I will do, I will actually regret. And that's another emotion that triggers. And then if it doesn't do that and market keeps going down, takes you out, right? You now are in frustration level. What you will do next, you will try to take the revenge from the market. And when you do that, you will lose more. And that's the whole, process behind that. So many traders out there, they're losing money because of that. So never get greedy in this business. When you see something and then you see there is a possibility in this structure, try and capture. That's why we're always saying to you, in these Sunday sessions that, guys, take partial profits, even though we know that. Like, for example, Aussie Chief, right? We have been telling you for the last 2-3 months that it's going to go up. It's going to go up. It has been going up, right? But still we have been telling you, take profit, take partial profit. Every time market pushes up, breaks the top, we are telling you take partial profits and wait for this to pull back. Why? Because taking profit and increasing the capital is going to actually strengthen your psychology. And that's what we actually try and get out of you, okay? Strengthening your psychology, right? So that's what you need to be doing as well. And the second one is a fear, right? Fear of, losing opportunity, right? And that's the thing where you actually get into the trade, because let's say you got, you're waiting for the trade for 2 days, 3 days, 4 days, even a week, let's say 2 weeks, you didn't find a decent trade. What you will be doing, you will be actually capturing, you will be over trading first of all in the third week, because what you would be thinking is, okay, maybe I'm the one not seeing the trades, right? You start to question yourself. And then after that, what you will do, you will try to capture every opportunity that you see, because you will have a fear of losing the opportunity. Never ever get into there, okay? Because these are the mistakes that will lead you for a bigger losses, and they will never be able to make you, a consistent, profitable trader, right? Remember, concept is very simple, okay? Very, very simple. Remember the first impulse, you need to wait for the first impulse, right? As soon as the first impulse came, it has to be sharp. You want to see that this market does not have a 3 waves minimum. You would want to see that, this market has go at least 5 or 1 wave, right? Even if it has a 3 wave, but we need to see a sharp movement here, right? That's all what we want to see in the first impulse, right? If you're aggressive or conservative trader, that's also subjective to your trading, right? But what you need to do after this impulse, you need to wait for your corrective structure here, okay? If you won't wait for the corrective structure here, and you will try to enter in here just because you're thinking that this is going to happen here, right? It's never going to come back. When market does something like this, this will make you frustrated. If it does that for a few weeks in a bigger structure, you will think that this is going to go back down one more time, and then what you will do, you will take the loss, and then market will shoot up, okay? That's where your psychology gets weakened. Never ever get to that level, okay? And also, you don't need 10 to 15 pairs to make money. You just need one single pair, right? Just choose one pair, right? Based on your country, based on the timing that you have, everything, right? All these aspects, put that into your, into your research, and then choose one pair, and where you can see that in that pair, when the movement is going to happen, you should be in that move, whether it's up or down. Okay, you don't need to worry about the hundreds of pairs. All what you need to worry about is one pair that you are trading. Okay, so choose one pair. And for example, if I have chosen this one, what I would be doing, I would be looking for what time of the day this pair moves the most, what sort of structure this pair makes the most, what sort of retracement this pair makes the most. If I want to trade this one, I will be reading the economies of these two countries, US and Canada, right? Because I need to know what is going to happen there, right? If there is any big event coming, if there is any sort of moment coming where I can see that, okay, that might actually impact my trading, that might actually give me movement, because of instability in the countries. I want to be aware of those, right? So these are the stuff that you need to be aware of. You need to know and study the economies and all these factors that I've just mentioned about that pair. Okay, take notes. If you're making mistakes, take notes, right? And make a journal. Like if there is a winning trade, capture the picture, put it into your journal. If you're losing, capture the picture, put it into your journal. Next time when you see something like that, it will save you from making the same mistake. Okay, understand your mistakes. The mistakes are not the mistakes until and unless you don't learn from them. Okay, so if you're not learning from your mistake, that's the real mistake. Okay, and also risk management, it's really important. I will be actually explaining that to you, in the next session. That risk management, after psychology, after learning the patterns, after learning everything, risk management will come before you actually start to initiate trading. Okay, it ensures you that you keep your losses small with a good risk to reward, and then you can make good profits. You don't have to be right. That's why we always mention, in our Sunday sessions, in our YouTube sessions, videos, that you don't have to be right, right? Many people out there, they are just getting busy, that they want you to be right in the market. You don't have to be right, right? You only have to be in the right side of the trade. That's all it matters, because we are here to make money. If you're not making money, what's the point of being right all the time? Okay, and remember, in this business, losses are very, very important part of this business, right? Even any business you start, losses are part of the business. Okay, so do not just get sad when you get very small losses once in a while. It's okay. Okay, manage them wisely. That's the whole idea. Okay, remember, when you remove your stop loss, you're basically telling the market that go and take all my money, take it, I don't need it, right? So that's the thing that you need to eradicate in your trading. Before you get in, have a plan, right? Have a plan. Remember, in this business, no one knows what is going to happen next. No one knows that. If anybody tells you that they are 110% sure that that's how the market is going to behave at this particular time of the day, at this particular day, right? Run away from them. Believe me, even if we say that to you, run away from us. Question us. Okay, because no one knows. We are working with the probabilities here. With this method that we have just taught you, right? With this method, you will be actually making consistent money if you follow our rules, if you're disciplined enough and you have a check on your psychology, and then you enter into the trade using our strategy. Because you're working with the probabilities. This system gives you high probability chance. Okay, and that's all what we are working with at the moment. Okay, anywhere in the world, everybody's working with high probability chance. No one knows what is going to happen exactly in the market, how far this can go down and how far this can go back up. The day you will realize that the market can move up 1000 pips against you or 1000 pips in your favor without even having any sort of news, without having any sort of say from anywhere, you will realize that this business is all about how you can minimize your losses and how you can maximize your profits. Okay, so if let's say you have got one loss or two losses, do not get sad on that. Remember, if you will compare your losses, right, and then get sad, you will actually losing the opportunity to make profits in the future because of that psychology, because you're down. And you will be thinking the next trade is going to be loss as well. Never ever judge that. Make up your mind like this. Never ever just basically base your outcome on one or two trades. Always have streak of wins and streak of losses. Imagine that you got 5 losses in a row, right? Where you were risking 1% only, right? And you have just only made 2 winning trades where you have made 10%, 5% in each, right? You will still be better off, right? You will be still better off by 5%. That's how you need to be looking at the streak of wins and streak of losses. That will tell you how your system is working. And that's how we actually captured when we were innovating our strategies. That's the whole idea base behind that. We have back tested on like last 20 years of data for many pairs, and that's how we actually innovated these strategies, because they were giving us good risk to reward, good streaks of wins. And that's what you need to be doing. If you follow the system, understand the concept, that's where you will get at. Okay, if we can do it, you can do it too. No one has like sort of crystal balls to know what is going to happen in the next moment. Okay, and remember one thing, it's really crucial actually that you have a check on your risk. Okay, in this, let's say if you get 5 losses in a row and you're risking only 1%, that would actually not bother you much because you will be only losing 5%, right? But imagine if you were risking 5% per trade and you have lost the same number of trades, you would be risking 25%. That would actually hit your psychology. That would actually give you sort of a nudge that what am I doing? Right? It's not your system is not working. It's just because you need to work on your management, right? Your risk management is not working in this. Okay. So if you lose 50% of your equity, remember you need 100%. You need to make 100% in order to come back to break even, right? And psychologically, you will be struggling. Okay. So that's why you must stay calm in every single situation. Think it this way, right? If you put this money that you're trading in the bank, you will only be getting 1% per year as interest, right? In this business, even if you make, let's say you make 4 to 5%, right? Let's not go far to 10%, 20%. Our traders are actually making a lot of money, like, in terms of percentages, but assume that you are making just only 5 to 6%, right? A month. That means what you're going to do in 1 year, you are going to double your account. Okay, that's how you need to think. Always think in a percentage terms, not in pips, not in money wise. Percentage of your account. Okay, and also remember, if this is a business, tell me anything where in any of the businesses where you invest money and you don't lose in the starting. Imagine that you have opened up a restaurant, right? The next day, if you want to sell it, you will lose money straight away. If you buy a car, right? And you are trying to actually, do sort of a business with that, right? You will lose money because it depreciates, okay? But in this business, what you're trying to do is basically you're trying to sit in your room in front of your laptop, you're analyzing the economy of the country when it goes, imagine how much money you can make in this, okay? So that's how you need to think. This is a business. We want you to be successful. That's why we are giving you all these tips that we have learned from our mistakes. We don't want you guys to actually do those mistakes. Okay? So if we can do it, you can do it too. Treat this as a business. Never ever let your winning trades turns out to be a losing trades, because that's the thing which kills your psychology. Okay? So what I'm saying to you now at the moment, it might be really easier for the new traders who are actually just, starting trading and, consuming this concept as a newbie. But it will be very, very difficult to adapt for the experienced traders. Guys, remember one thing. I know that, it's really hard to get out of, your old habits, but it needs a strong decision making. It doesn't need time. You need to decide now. Okay? You need to decide now. Once you decide that, you will see that things will start to change for you. Try to be selective. Okay? It's not that every time you need to look at the chart, you need to click the trade. You don't have to do that. So these are the things that you need to bear that in mind, right? To succeed in Forex trading, all what you need is an edge. Like I said to you, high probability chance and then the edge in the market. By giving you this course, we are giving you an edge in the market. All what you need to do is practice this, backtest this, and then get some experience in that to make consistent money. Okay, so work smartly in this business, not hard, because there is no physical, work involvement in this. Okay, what we have taught you is a complete system. Remember that. Okay, so if you write it down, combine that with your own habits. Let's say you are a swing trader, you have been trading like this, you have this time of the day, choose the pair, trade the concept that we have taught you, and you will see that things will start to turn green for you. Okay, and that's the whole idea behind that. Because why do you think we are saying that to you to make the journal, right? It gives you a sort of a plan. Because every time you make a mistake, you paste that mistake onto that journal, or every time you made a profit, you paste that. It will show you. Sometime by doing something, you don't realize what you're doing until you see it. Okay, so that's why seeing is very important in this business. Okay, so bottom lines: do not over risk and do not over trade. If you're losing, remember, stop. If your streak of loss gone up, you need to stop. Okay, you need to take some rest, breathe. When you feel like you are rejoiced again, you are relaxed again, come back again. Trading is not going anywhere. These charts are still going to be there. These opportunities will still be there. But if your psychology goes, it's never going to come back. It will take some time for some, but the other ones, they will be actually started questioning themselves. It will never come overnight, okay? It will come with experience. It will come with your hard work. So these stuff, you need to remember, everything what I've told you in this module today comes with the discipline. You need to be committed, okay? You need to make sure that you have a strong understanding what you're getting yourself into, okay? And also put realistic goals. Remember, if you're entering here, you can't be expecting this to, just for this to go 1000 pips in one day. It doesn't work like that. Okay. So if you do that, you're going to obviously struggle, because what you will be doing is you will be expecting, something that is not realistic. Okay. So after this, remember, we recommend you to go practice. Okay, practice this. Whatever I've taught you today in this module, you should be actually implementing that in your life. Go and change that. Like I said to you earlier, it's never too late. It's never too late. Okay, you can still do that, because if you don't do it, then you'll be wasting time. Okay, I would actually highly recommend you this book. Mark Douglas' book is called Trading in the Zone. It's really good for your psychology, by the way. I've read it many times. Many of our traders in the Slack, they have been reading it, and then they have recommended so many other books to each other as well. But this is one of the best books, I could recommend to anyone. Okay, so go and read this book. It's free online. Just go and Google it. You should be able to get the audio on YouTube, or you can get a copy of the PDF copy as well, for free from internet. Okay. So remember these few rules, what I'm going to tell you. I want all of you to write it down in front of you and then paste it somewhere so you can read them, while you're practicing. Okay. Fundamentals only cause volatility in the market, but the market always follows a certain direction defined by a structure. Okay. Remember what I told you the other day when I was, showing you the significance of fundamentals. If I have We were here somewhere, right? I said to you, we are here, we have impulse only. If I try to buy this one, I know that this is going to correct here. Now it's correcting here, right? So now, if I have a news today, this trade will make sense. But what will happen? It will only give the volatility in the market. The structure is the one giving the direction. That's what I said, okay? Now, labeling is only a roadmap for you where you are on the chart. So that's why we are actually starting from monthly all the way down to 1 hourly and take the trade, because we need to know where you are in the bigger picture, and labeling helps you out. Okay, so it's important to understand this, that where you are in the bigger picture, in the bigger structure, so you can trade that structure. Okay, and also remember what we have been telling you: after an impulse and a correction, your job is to trade this impulse. That's your trade. Okay, that's your trade. And any structure, no matter whatever it is, whether it's a corrective structure, impulsive structure, it needs to start with a sharp impulse, right? Sharp impulse is the basics behind that. It needs to start with an impulse. Any structure starts with an impulse. Okay? And remember, usually when we are trading, impulse, correction, impulse, when it comes to the fifth wave or Z wave here, we try not to take it unless we have a very good risk to reward in that. Okay, otherwise we stay away from the fifth impulse. Okay, and also, like I mentioned to you, very important, never ever trade what you feel, always trade what you see in the charts. Okay, and if there is no setup, there is no trade. If we are expecting an up move, market keeps going down, do I need to force myself to get into it? No, I don't need to. There is no setup for me. So this is the reason you need to make sure that you do not force yourself into taking the trade. And trade, if you lose 1 or 2 trades, that doesn't make any big difference if your series of losses and wins are actually in positive. Okay, if you have lost 10 trades and if you have made 15 profitable trades, you're still fine, because your average ratio in this one would be better, because it will be positive. You have already won 5 more trades. Okay, that's how you need to be always thinking. Trade, not trade by trade basis, by series of trade basis. Okay, and also, if you are in a losing trade, never ever add to it, because if you add to it, you will actually not double your risk, but you will be actually doing sort of a torture on your emotions. Okay, because if it keeps going up and up or down and down, you will be struggling more and more. Okay, you don't want to do that. So that's why keep a check on that. It's really easy to actually, and it's very tempted actually when you are very certain that the market is about to turn now, right? And you wanted to take the position so you can recover your losses quickly. It doesn't work like that. It will add your risk, it will duplicate your risk, and it will actually have a major impact on your emotions. Okay, right, so these are a few points that I want you to actually write them down, right? Apart from these points, you need to make sure that you are patient enough, right? Do not expect market to move in one single day or one single hour. It does not work like that. Never something goes in a straight line. It needs to give you an up move, correction, and then up move. Okay, it needs to give you an impulse, correction, and then impulse, correction, and then impulse. Okay, that's all what it is. And if you don't understand that bit, you will struggle later on. Okay, it is really difficult to grasp this, but once you grasp this, you can't ungrasp this. Okay, and also winning trade takes time. Okay, so you need to be patient. If you're not patient, you will be actually closing your winning trades quickly and taking less profits, and then closing your losing trades early and late, and then making more losses in that. Okay, so focus on trade well, not trade often. Okay, because if you refuse to cut losses, it will be actually leading it to the bigger and major losses, or even you break your account, right? Sometimes, because when the market has a lot of volatility, it doesn't give you a chance to get out, even for a bigger loss. Okay, and after you take in the loss, never ever take revenge from the market. Try and wait for your setup before you jump in again. You don't need to rush into it. Market is never going to give you your money back straight away. If you do that, believe me, you will end up either in a massive drawdown or you will end up losing a lot of money. You don't want to do that. Just understand this. This is the only two axes you need to understand. One is a price, second is a time. These are the two axes, right? You need to understand. And if you take the one scenario out of your, out of your whole plan, which is a big loss, you will be fine. Okay? I know that it's a big risk to big reward, but remember, it comes with a big loss as well, right? And if you take out the big loss scenario from your situation, you will be fine. You will never be able to break your account, because if you're losing small, you will be making big as well at the same time, right? There is a potential for a bigger, bigger profit in this. So that's why never forget that. Why people lose a lot of money in this business is because, you see, they are taking this as a gambling, right? They are thinking that they're gonna get rich overnight, right? They would sell everything here, or they will buy everything in here because there is a sharp move here. They will buy, they think this is going all the way up, but it doesn't work like that. Never ever think like a gambler in this. This is a business, okay? You need to treat it like a business here. If you don't do that, you will end up losing a lot of money, which you have actually, earned with your hard, with your hard work, okay? Even if you're very sure that, this market is going to go in your direction, still, never ever over risk, okay? So your worst case scenario should be only a break even or a small loss, okay? Because if you're losing big in any of your trades, you're definitely doing something wrong. And that's what we don't teach here, okay? So to conclude everything, I would just simply emphasize on a few things again, and then we'll call it a day. And then tomorrow, we will go into the details of the strategy, how we enter. We will only be sharing one strategy with you guys in this, in this video, the next video. So what you will be doing is basically combining all of it, what we have so far taught you, okay, into a plan. And that plan, you need to tweak it according to you. There is no set plan, okay? In this plan, you are the only one who's going to tweak it, because you know yourself, no one else does, okay? So that's what you need to know before you actually put your hard-earned real money in this, right? Practice it. Whatever we have taught you, go and back test it. Don't even believe us, back test it, and you will see that, because many people, hundreds of our students are actually already making money, right? So if they are making money, with the same method and you are not, there is something you're missing. So go back to the videos, watch them again. Remember, one day you will be exactly where you want to be if you're not there yet. All what you need to do, keep working smartly. That's all. Okay? In this business, so far from our more than 10 years experience, what we have actually figured out, your biggest loss in this business is not financial loss, right? It's your psychological weakness, okay? Because if any trade is meddling with your brain, with your psychology, right? Let's say you entered here and the market you entered here and the market keep pushing down. What will happen if this is actually meddling with your psychology? Take that damn thing off. Even though you are sure that it's going to go back up, it's not your trade because it's meddling with your psychology. Take it out. Never ever let it affect your psychology, because remember, you can come back with the financial loss, but it will take a long time for you to come back when it will hit your psychology. Okay? It's really difficult to repair your psychology when it's, weakened. So that's why you don't want to go there. You don't want to actually get it, over to your head. Okay? So with that note, guys, I'm gonna call it a day, and then like I said to you, tomorrow will be our last class where we will actually explain the strategy in detail, and then after that I will give you some sort of small lessons on risk management, trade management, and money management. With that, we will conclude the course, and then we'll meet you guys in March and April for those live sessions. Okay, with that note, thank you very much, guys. I shall see you in the next class.